keep pushing me closer to the edge again. The edge again. Suffocating underneath. Try to love the pain. You hit me like thunder. Sé que me haces falta. Y cada vez que nos juntamos me derramas lo que siempre escondo en mí. You pull me under. Even if I try to hide, try to run, you got your teeth in me and I'm tired of fighting. So give me a reason, 'cause I'm at the end. You keep pushing me closer to the edge again. The edge again. Suffocating underneath. Try to love the pain. I just wanna feel again. Bloodshot eyes, I know I can. You pull me under. You keep pushing me closer to the edge again. You keep pushing me closer to the edge again. The edge again. Suffocating underneath. Try to love the pain. I just wanna feel again. Bloodshot eyes, I know I can. You pull me under. You keep pushing me closer to the edge again.
What is up, my family, and welcome back to the channel, man. We are here. We are alive. Please do me a favor. Make sure to throw those A's in the chat right away. And also, make sure to hit that like button, subscribe to the channel, do everything necessary to get this thing to live long, thrive, and survive, man. Let's go ahead and get some good vibes up in here, man. GME is absolutely ripping. What is up, my family? Welcome back. Happy Friday night. Happy Saturday morning to some of you. I know that some of you are watching from way abroad, man. I get some people up in here from the Czech Republic, bro. I get some people from India, man. I get some people from all over. Welcome, everybody. Welcome back. Let's go ahead and talk the stats about GME, man. Did you actually miss the boat or not? We're going to go ahead and find out in this stream tonight, guys, if there's still an opportunity to get in or no. Damn, bro. But what is up, everybody? Welcome back. Let me see who's coming in. I see my trading team already coming in, right? I see you guys in there. I love you, man. Thanks, guys. Thanks for coming on by. Ripe, Gnosis, Torito, Cliff. What's up, guys? Pugs, Conquered, Zoe. What's up, brother? What's up? I see Frank. Oh, dude. I haven't seen you in forever, man. What's up? All right, so No Trust, good to see you there, man. Guatemala coming through, saying it, man, saying it the right way, bro. All right, man, I love it. No, this is my brother, dude. What did I do to deserve you, bro? Thank you so much, man. I really appreciate you doing all that stuff, brother. I love it. I needs money. Courtney Nord, what is up? Another very talented trader up in here, and also very talented musician there. You better search her up on Google. All right, what is up, Titty Sprinkles? Nick, good to see you there too. Jay Allen. I love it, man. M-Dog, good to see everybody in here. What's up, Kat? I love it, man. I love it. Guys, we're going to find out. Livid, what's up, dude? Very good to see you. Arca yells, okay, when she shows up, I'll go ahead and yell that shit, man. I don't see her right now. She told me that she's going to be in here pretty soon, right? Oh, Quinny, baby. There she is, man. What's up, Nina? Oh, man. Yeah, dude, but we are here, man. We're doing good. You know what, guys? Today, we're going to go ahead and make sure to go over a few things, right? It's not only just going to be the GME and AMC charts, right? It's not going to be just that. We're also going to go ahead and go over the options flow, guy. Come on, man. Come on. We're going to go over options flow, right? What? Yes, we're going to go. Yes, not now. Gnosis just mentioned the shit out of you in the freaking Discord. He said, Nina, with the little hamster thing. Is it a golfer? Or what is it? What is it, man? What is that large rat rodent? All right. Dang it, boy, my bro. Good to see you there. I love it. K-Spec, my dude, I see you, man, coming up with 150 different names /2. Robert, good to see you there. Guys, so this guy made a good move. The Wells Fargo move, man. If it wasn't for that, do you think we would have ran anyway? I don't know. But you know what? Why don't we go ahead and start finding out what the options flow is saying, right? I got the statistics here for the physics side of things, right? You guys already know how I play. You guys already know that I play the statistics game, man. Probabilities. You know why? Because numbers do not lie. People do. Bob, what is up, my brother? Very good to see you there. He said, I never saw that accurate TA like yours. Bob, I love you so much, man. Thank you, my brother. Really appreciate you. Nina, baby, go over there. Say hi. Gnosis over there saying Nina, you left the full hanging. Happy Dorito. Yes. Yeah, now you guys are catching it. That's right. Happy Dorito saying Quinn, the traitor formerly known as Nina. The real conqueror, my bro. I see you in there as well. Quinny, baby, I see you. Hola. Anyway, so let's go ahead and flip over the screens here to take a look at the options flow for GME, right? Let's see what's going on. Guys, first of all, I know that the reporting, well, we're not going to be able to get the open interest changes in the call options until Monday, right? Because it is, that's how it works. Because that's how it always works. But let's go ahead and take a look at that anyway. Guys, first thing I want to go ahead and mention here is that, well, let me put this on candles, right? We're going to put this on candles so we can see exactly where it is. Intraday close, as you can see here, came out at 21.85. If we are observing the close post-market, we are closing, let's see. It looks like we came slightly down to around 21.73. And that is just not bad whatsoever, right? So this is what I'm observing right here, just so you can see the post-market close. And coming back into the options flow, take a look at this right here, team. Max Pain for GME is sitting at about $20 right now. So that is clearly, putting some max pain on some boys or some boys and girls out there, right? Okay, so why don't we just go ahead and take a look at the open interest prior to today, right? So we were already getting massive bullish sentiment on this, right? In fact, I can go ahead and check on that right now too. Okay, there you go. So take a look at this. The bullish sentiment it's literally 205,537 to 38,000 ratio. And bearish sentiment here, not doing so good. And neutral sentiment, not nearly as bad as this bearish sentiment, right? Guys, check it out. This is all bullish. We were already bullish before we had this announcement done today. So somebody knew something, somebody did something, somebody said something, and there we go. Right. So let's go ahead and take a look at the open interest here before we take a look at the changes on Friday, right? So strikes, we're gonna go ahead and go over actually the matrix. Let's turn the heat map on, right? So that's gonna give you a concentrated area of numbers. Listen first here. This is your date, right? This is your expiry, options expiry up here. For those of you who are not sure what options contracts are, right? I'm going to give it to you very, very lightly. It is a contract that is comprised of 100 shares of your security of choice, right? So that security of choice being GME. You're able to buy this contract at a cheaper price than buying individual shares, right? So your promise is to say that, for example, you buy a long call option, right? Long call means you want to bet the upside, right? So if you're saying that I made a promise here that I'm going to buy this contract at say at the present price, mark price of $20, and I'm expecting this to go to $30. So you buy something what's called out of the money, right? So you buy it at $30 and you have that extrinsic value from 20 to 30 that can give you massive gains, right? So as you get closer and closer to that price, your options contract begins to multiply. There are several factors that multiply the options contract. In fact, it's considered to be a levered instrument, right? Because you're getting things in the Greeks, right? I don't want to confuse you too much if you're not too aware of it. Here's the bottom line. Long calls bet the upside, long puts bet the downside, right? Not the same as shorting though, okay guys? Not the same as shorting. Long puts, long puts, right? Those are betting the downside. Long calls bet the upside. All right. So now that we know that and we got that out of the way, let's go ahead and take a look at the expiries right up here, right? This is your expiry. This is your call option here. And this is your put option here. Okay. Now to the left and down, these are all your strikes. Okay. So when we're looking at the money where we are presently, $21.73, this is why this area is highlighted. This is your at the money value. Okay. Now, let's go ahead and take a look at the open interest here to see what people are betting on. So now for the 27th of September, we're going to go ahead and see if there's any wild numbers up in there, right? Okay, nothing. But if we can see right over here, $125 has 57,300 open interest to literally nothing in the put side. Nobody betting the downside there, right? Neither here at the 100 mark, 12,200, neither over here either at 5,200 to zero. Guys, this is really insane. Let's go ahead and take a look at other metrics here to see if we have any other concentrated values, right? So let's move to the right to see if we have anything else of any other ridiculous numbers like that, right? Okay, in fact, we don't, but there are some really high numbers at the $40 value, right? So this is going to be October 18th expiry, $40. People are betting at 10,381 to 500 on that ratio. 10,000 being the long side, right? The people that want the bullish side, right? Okay, now, right. Oh, check that out, guys. $30 to expire on October 18th, 19,200 open interest to 1,285. And we do have several other areas that has that high open interest as well. Almost 8,000 to 1,400 at January 17th for these leaps, right? Very, very interesting times here. For the immediate short term, I guess for the immediate price, yeah, we have 19,446 to 1,630 on the open interest here, right? So 19,000 leading the way. So bullish sentiment all the way. Guys, now, today, I don't know if you realize this, guys, but today was OPEX, right? Today was actually the quad witching. So today, the quadruple witching, we got all the options expiries, right? We're talking about stock options, futures options, derivatives. We're talking about everything closing all at once simultaneously. So that happened today, okay? Now, price action intraday for GME, just like we were looking at before. Let's go to the daily time frame and take a look at that, right? Take a look at this. We closed at 21.85. Guys, that means that 21 and under just closed in the freaking money. Guys, that means that there could be gamma coming in on Monday and Tuesday. Holy shit. Okay, all right, so let's take a look. Let's take a look. Oh, damn. All right, here we go. Look at this. This is your $21 at the money, right? Look at this. The $20 calls, 13,400 just closed in the money. Guys, these expired in the money. You understand? All of these expired in the money. Holy fuck. There actually may be something moving on Monday and Tuesday. Shit. Oh, dude. Oh, they used the hell out of that liquidity there. What? Oh my goodness. Okay. Guys, there actually could be something interesting here. So let's see. No, brother, Apollo, of course not, dude. In fact, you're talking to the one person here that is not a fan of GME, and I actually do not have any open positions on that, my brother. What I'm trying to do here is I'm trying to help the community out to get their money out safely, right? When we begin trading, a lot of us begin with the hype, right? And then we experience this downside, and we get down, right? And then we it's a lot of pressure, right? So what I'm doing here is that I'm trying to show the team, right? I'm trying to show the team what it is to actually look at charts in a different way. I'm a statistical analyst, right? I do practice technicals, sure. I practice them so I can give you guys the little hints here and there. But traditionally for me, my edge lands within statistics, right? The numbers don't lie, people do. Okay, so in reality here, yeah, everybody's going to take it real seriously here because we want to make sure that we can get the families out of here. A lot of people betting wrong types of cash, right? A lot of people betting this cash that, would have been for their children's colleges, man. And you're thinking to yourself, that's not my fault. That's not it. Of course, it's no one's fault, man. It's no one's fault but our own, right? But if I can do that good deed for the day, then I'm going to go ahead and continue doing it for the fam bam, right, guys? Make sure to hit that like button. Make sure to subscribe to the channel. Do everything necessary to get this thing to pop off for real, guys. Welcome back. Welcome back to another live stream here for GME and AMC. So now I want to go ahead and go over the statistics here for GME, right, guys? And the reason why I'm going over this is because the signal is not done. So what signal, you're going to ask me, right? Let's just go ahead and make this less congested, right? So I'm just going to go ahead and leave the raw price action here, and I'm going to show you and display to you what linear volatility means. I'm going to give you guys some statistics based on some physics, okay? This is where shit gets a little interesting here. Where did I learn this from? Guys, I learned this from a licensed market maker and trader at the NYSE. And also, where at the NYSE? In the upstairs. And what is the upstairs called? Arca. So it is, that is really, really where I got my name from, right? This gentleman here, I learned a lot from him, and this volatility in linear versus stochastic momentum signature is actually something that I learned from him. And this is not something that is commonly used or commonly known within the retail participants, right? This is something that I wish to continue exposing, to the retail so that you guys can use it and so that you guys can observe how probabilities work. Now, when we're talking about volatility and linear, guys, this is inescapable. I'm talking about inescapable for real. Why? Because at any moment, right, when somebody trades a dark pool trade, that reflection will end up showing up in the broader markets in some way, somehow, during the post markets, during Euro Open, in the wee hours of the night where no one is watching, right, where they do what's called the block trading, right? Huge volume block trades happen in the really illiquid trades, right? They're massive transfers that happen during the wee hours of the night, right? Those hours of the night, at some way, shape, or form, for some reason, let's talk about like this. For my time, right? You know that I'm PST, I'm Pacific time. So at 1 a.m. my time, which is 4 a.m. Eastern time, the Euro markets open, the Euro Open, right? So that opens at that moment, and for some reason, price action always spikes up or down. Now, the reason there is a spike up or down is because there have been dark pool trades during the time where the markets officially closed. Post-market, post hours, not intraday. So we have the intraday trading, post hours, close. And then between the gap of the market close and the Euro Open, there are block trades happening in the dark exchanges, right? So when that happens, there is a shift in price as soon as the market sees it at Euro Open. So you're going to see like $20, then it goes to $25, and then it goes down to $15, right? All of those shifts that happen in that moment, we can see via volatility spikes. Now, volatility in linear, we can mark off the duration of any time that we're sitting within highly expansive or critically contractive zones like these, right? That marks off iteration. That gives us behavior. We are able to then see the combination of behavior, human, meaning retail, versus algorithmic behavior. This gives us a maximum edge. And it is something that I teach, guys. This is literally something that I teach my master's students, which, by the way, that beginner's course is going to be starting in a week. So get your asses in there immediately. Guys, so let's go ahead and mark this off. If we're talking about critical contraction phases, imagine this on the hourly time frame. I'm gonna measure this, right? Let's just say, I'm going to give you an example. This contraction phase lasted about 49 bars. 49 bars being 1 hour candles, right? 49 1 hour candles, or equivalent to 5 days in 1 hour. So then we go to the next contraction phase. We measure this one, right? And then we measure this one here. And then we measure this one here. And you're catching what I'm saying, right? So when I do that, right, when I'm measuring those iterations, I don't only measure the duration of the expansion or contractive phase. I also measure whatever price action did during that moment. So whether it's the upside or the downside, I will mark it off so that I can have here a higher probability result. So I'm really robotic about this. Check this out. This is the back test here. Volatility versus stochastic momentum on the daily time frame throughout the entire trading history of the AMC asset. Now get this. This is information that gives you higher probability move. How would that be done? First of all, we are marking off 106 total iterations here, 80 of which have guessed the upside correctly. 80, guys, 80. That gives us a 75.47% upside accuracy whenever that criteria meets. What is the criteria? Here you go. Anytime that volatility represented by these little bulbs, right? The histogram. Anytime that volatility and the moving average, teal line, enter the critical contraction phase, which is within the 15% of contraction, anytime that it enters and then it exits, that marks off a criteria. So my iteration starts off right when it breaks the 15% of contraction. I needed to have an upside pivot, right? I needed to have the upside bias. Remember one thing, volatility is direction neutral. This is not telling you, the upside is not telling you necessarily that we're going up, because we could be expanding, right? Hitting that throttle on a downside too. So this is where our creative side of traders come in. We have to determine what side that probability goes in. Now, for those of you who have been watching here, you already knew that this fired off about a week and a half ago. The signal had already fired. And where did it fire? It fired off right about here at $21.92. And we just got back to that. Now, this is the interesting thing, that when we measure these iterations, the samples, right? We get back a data set. Let's go ahead and figure out that data. Okay, so continuing on. The upside accuracy, 75.47%, good, right? That's the probabilities of us getting an upside move that would be equivalent to 11.19%, right? Okay. I also calculated here the standard deviation. The standard deviation is telling you that we could move, it would divert against the price direction, right? So diversion meaning that if we're betting the upside is going to go down, right? So the diversion here, the deviation, is going to be 12.10%. That means that from whenever the signal fires, we could drop an overall average of 12.10% before we make the upside move of 11.19. So let's go ahead and mark off what happened here, right? Let's take a look at this. So price action fired off, like we said, right about this area here, right around the 2192. Let's measure the downside on the 2192. 2192 with the decline that we just faced all the way here. What is that? Minus 12.02% standard deviation from the fire of the signal. So not only did you guys already know that we fired the signal, but you also knew that we could drop 12.10% on average when this signal fires. What is Arca telling you? Arca is telling you that you knew that this was going to drop 12% before it was going to happen. This drop didn't happen too long ago, guys. We already knew that this drop was going to happen, and are we talking about it? No, because we want to talk about the fucking upside all the time. Where the fuck is my secretary? No, it's not who you think. Don't fucking say it. I'll kick your ass. All right. Anyway, what I'm going to do here is, yes, guys, the statistics are playing out pretty freaking intensely amazing here. Okay. We got the downside. Now from the fire of the signal, which is the 2192, which is pretty much where we are right now, an 11.19% move to the upside is to happen. Where is that? The 11.19% move to the upside is $23.63. Right? That's the probability with a 75% with a 75.47% probability. That's the next move here. We already got we already nailed that shit to the fucking 100% right here, man. 99.9991. Fucking 12.02% of the 12.10%. Nailed on that downside. Who the hell knew? Guys, first of all, I am not telling you that I knew whatever happened there. What was the news again that got released? Was it dilution? Or what? I forgot what it was. Something happened. My brother Chad, what is up, dude? Good to see you there. Whatever that bad catalyst was that just came out was the reason that price action dipped. Was it the earnings? It was earnings, right? And it had yeah, that's right. So it looks like we had a 10.87% surprise. And we didn't really hear much from Ryan, right? From the CEO. We didn't really hear too much about what he was going to do. We speculated on the Wells Fargo thing, all good, but it wasn't solidified. I think we saw the letter of intent, all of those things. So we really didn't understand or know back then, right? I'm talking about September 9th, September fucking 6th. All of those areas there, right? Yeah, so the 20 million share offering, that was exactly it. Knifey, thank you. Apollo, thank you so much. So that put price action to the downside. It wasn't to tell you that I knew. Guys, there's no way I could ever tell you that I knew that this was going to have that share offering. Who the fuck am I? Right? I don't have that. The thing is that statistics measure the probabilities here. So given the iterations that we've seen historically, when you calculate a standard deviation, which is the square root of it's the square root of equal values, right? So then you're going to divide it by that square root and you get, guys, it's just, let me just tell you that calculating the standard deviation is what told us that we have a probability of dropping to 12% with a 75% accuracy. Equally, as well as we have an 11.19% upside probability during the expansion phase. As long as volatility is maintaining within this volatility area, within the 15% of critical contraction and 90% of critical expansion, the signal is fired. Doesn't matter the fucking direction of the stochastic momentum. It does not matter. As long as this is within the bounds of that range, then it's good. Now, guess what? Just in case price action combats and beats the 11.19%, which is equivalent to around 23.92 to around 24.50, we still have further calculations here, guys. I also went ahead for you. Remember, I am not long or short this asset whatsoever. I promised you that I will remain risk off in order to maintain a clear bias here for you. So if the downside shows up, I'll give it to you. If the upside shows up, I'll also give it to you. I've been talking about this setup for a while now, guys. We've been dormant though. We've been doing that whole number down there. Okay. I calculated beyond the 11.19%. And the way that we can figure that out is by calculating the upper and lower bounds of the first, second, and third standard deviations. Now, if we beat it, that $24 value, $23.80, whatever that is, the upper bound of the first standard deviation will give you a, let's see, 23.29% move to the upside, which puts you at 27.04. If we beat that number, remember, volatility must maintain within the bounds. Okay, if we beat that value, I also calculated the upper bound of the second and third. The upper bound of the second standard deviation takes you to 29.68. Now, the next one here would be the max range for the daily time frame volatility versus stochastic momentum signal. That would take you to a valuation of $32.34, which is equivalent to a 47.50% upside thrust. That would be your max move. And so far, this is playing the freaking play dead on the money, guys. This is playing it almost to perfection. I'm not saying that it is going to go there. I'm just telling you that from here to $24, you have a 75.47% chance that you will get that. It is not 100. It is 75.47%. These are, guys, these are statistics. They are not certainties, right? but they're playing out spot on. And this is why I have you here today. Okay? GME is on a path right here, right? GME is on a little bit of a journey right now, so we're going to have to go ahead and be patient and see what's going on. Really interesting times are ahead for GME. Now, if I can observe GME's more, I'd say, simpler way of observing price, right? Then you're going to go ahead and remember this. The last time you were with me, I told you to write these receipts because these would be your areas of entry. And this would be your area of take profit. So we got our entry of 2019 to 1991. And we got our exit today of 2154 to 2223. So this is a really bottom line way of looking at it. This is more of your technical analysis type of thing, right? Like, playing technicals and stuff and formations and cups and handles and bullish engulfings and all that. That's the simpler way of observing price. I'm observing it more of an institutional way, so I can go ahead and give you guys an even deeper edge because we have extremely talented influencers already giving you that technical side. But if you are curious over what I believe or what I believe to see within the technical side of the analysis here, then I can go ahead and do that for you. Remember, guys, I am also a stock trading instructor. Get in touch with me, ArcMastersCourse at Gmail. That is about to start next week. And I promise you those seats are going to get taken. Make sure to get in touch with me right away. Make an edge out of yourself, right? What better investment would it be than other than yourself? Let's go ahead and observe the technicals now. And this is what we're going to do. I am going to take each and every single target, all this work that we did, right? All this work that we did, it's going to go kaput, right? We don't need it. We don't need any of that. Okay, so what we're going to do now is observe what price is doing on a daily time frame, right? Lots of speculation here. I already see it. Guys, I don't pay attention to anything like this of this sort. I mean, if we're talking about just your standard analysis here, I mean, the fucking sure. I get it, right? I see it. We have like a falling wedge in here, right? Just to put things into like a deeper perspective, right? We have a type of falling wedge here. Breakout happened, and it did happen within the 65 to 75% to the apex of the triangle. That's your typical behavior. The other signal would be, did we have the declining volume to back it, right? Well, it looks like we did. Volume completely declined into the breakout. Great. So we got that breakout target. Now, was it actually met? Well, the breakout topside target from this wedge, this is going to tell us if we are respecting your technical analysis, right? This would be psychological and formation theory. So you take a trend line from the very, very, very back side of your falling wedge, apply it to the breakout area, and that'll tell you the topside target that you would get. So this was telling you that you were going to get 58.52 at the breakout of intraday chart GME. So very interesting that you're getting that topside target anyway, right? And mind you, I am kind of just breezing by this like whatever, right? I'm not actually paying that deep of attention to it because I don't find it worth my time too much, okay? But because it gets a lot of attention, I'm gonna go ahead and give it to you because this is where all of us start. Right? We all start within the formation analysis and also within the psychological formations, patterns, right? Multiple formations, whatever it is, that this is where we are. Now, looking at a closer perspective, now that we see that we are respecting macro formation, macro psychology, good. But I mean, what do we have, right? Well, usually speaking, when you create, this is another type of bullish formation here. This is all just this price action here you can omit. Right? But you're seeing this sort of a rising valley, right? So when you have this price action, and it's specifically here, when you have it create a higher low, that usually indicates a 100% retracement. So the 100% retracement of this local area would be $23. $23, no prob. It looks like we're already getting close to it anyway. Now, if we're talking about full-on retracement using post-market, this would be your higher low. Great. But that would be 100% retracement to this target here, 29.83. Now, what's curious there is because this type of formation here indicates that 100% retracement, right? Here's the next thing. The $30 valuation is already being looked at. by the upper bound of your second standard deviation, 35.39% from the fire of the signal that happened at 21.92. So now what you're seeing me do is that I'm merging statistical analysis with formation theory. So if I can have now the psychological backing that we would reach the targets of so-and-so value via a statistical thread of analysis alongside a formation or psychological break event, then we are moving somewhere. Then things are looking good. Now, another thing that I wanted to show you or to remind you is that guys, I'm not making this shit up. Options flow. Check this out. $30 strike, 19,201 to 1,200 on the long side of the fucking calls. Wait a second. Did Arca just give us validation, or did Arca just show us that we have validity within an options flow by open interest, validity within a physics versus of stochastic momentum, right? Versus volatility on a statistical backtest and formation theory? Hold the fuck up. Hold on. How is it that he just validated the $30 move within just those things? Well, that's the way the cookie crumbles, guys. If you want to learn how to fucking do it, then I'm not going to repeat myself to you. I can only lead you to the fucking water. It's up to you to fucking drink it, right? I'm sorry that I'm aggressive like that. I'm a stock trader. What do you want from me? I'm a pirate, right? Anyway, but let's go ahead. I love you guys. I apologize, but I love you, okay? But fucking, I really am like that, okay? I'm not gonna portray someone that I'm not, right? I'm aggressive. I talk shit, right? And I just put my fucking brain on mathematics on this thing, and we create numbers and we play the fuck out of them. All right, I love you guys so much. All right, so I'm getting moon soons, and when moons here pretty soon, okay, you guys? But remember, I'm not usually the guy that plays for the squeeze plays, right? I'm usually the guy that plays the institutional way. Guys, I'm dead ass not kidding. I'm dead ass not kidding here, guys, but I am already a part of a growing hedge fund, okay? So you are talking to an institutional trader right now, okay? So I can't say too much of the details, right? Of course we can't, right? But yes, so I'm probably going to be some type of a quantitative analyst for it, but also a lead, right? Maybe a chief. Wink, wink. Okay. Anyway, yes, guys. So this is the way that we're talking about formation theory, psychology, leading towards the 100% retrace of $30. Options flow, giving us 19,200 in the open interest out of the 1,285 of the puts, completely getting smashed by the October 18th expiry. Good, right? And one more. Of course, just to remind you, the upper bound of the second standard deviation from the fire of the signal at $21.92 using historical volatility and linear versus stochastic momentum. 35.39%. 29 what? $29.68. Guys, come on, man. I'm not that. When you're okay, one more. Let's do one fucking more. Let's see what we got. We got a 12-hour close today. We're gonna use the total range. Fuck it. We're gonna use the daily range, the whole swing low. Okay, from this low to this high on geometrics now. Okay, we're gonna use geometrics to validate the potential upside. What I want here is either a solid number at 2 fib, right? Fibonacci sequence. I get a 2 fib, I get a 272 or a 618. I want those three. Preferably the 272 and most preferably the 618. Okay, let's do it. Topside target that we're evaluating here is $30. Let's go ahead and expand it just now. Okay. Well, what do you fucking know? 3-spot 272, 2966 to 3-spot 618, 3103. I am gonna fucking drop the mic so fucking hard it's gonna blow your ears up. I don't even want to hear it. All right, guys, now I just gave you psychological validity, I just gave you statistical validity, and I gave you an options flow validity. Geometrics included. Fucking complete huge package, all right? Now, did you miss the boat? This is the ultimate question here. Did you actually miss the boat? Are we going to get entry or are we not? right? Guys, I fucking love it, man. I already have, this is a Friday night and we're talking about, on my stats here, I'm seeing that there are over 100 viewers on the YouTube. I got my team in Discord. Right? Come on, man. Guys, hit that like button, subscribe to the channel. Thank you so much for being a part of the team on a very personal day right here, right? Your Friday night. But this is actually for you guys. I do this for you so that I can give you guys a deeper edge, right? And one more thing that I can admit while we have a full house right now is that I am short bias. I am a short bias trader. But I completely disagree with what the capital markets have done to the retail sentiment and to the retail trader, to the new guy, to the little guy. So for that, I say fuck you. And I'm going to come on here and I'm going to give you the targets of the shorts. And I'm going to give you their statistics and their validity. And I'm going to give you their play so that you can have an advantage. Fuck them. I don't give a shit. I'll say it how it is. No one can ever chase me, guys. Don't even worry about me because I have a whole mathematical backing on it. They're going to say, oh, you're spreading news, oh, this and that. Well, go ahead and look for yourself. And I'll show you how I created the math. And then what are they going to say? Nothing, because it's public. Volatility is literally public. It is literally a rule in life. It's like, what are you going to do? Change gravity? You're going to manipulate gravity? You're going to short gravity? No, you're not going to short gravity. You don't know shit, you know? All right. So, yeah, guys, very, very interesting times here. I want to go ahead and just make sure that I can also give you the analysis thread on AMC. What is it doing? Because I noticed that I got a huge pop of viewers within the last AMC video that I put up. Everybody was like, wait, Arca. I'm getting DMs left and right. Arca, what? How did you know that AMC was going to ride up to that to the targets that you said? What was it that you saw to get the upside targets on AMC? Well, I mean, fuck. Do I have to repeat that? I have to repeat that every time, guys. It's the stat. It's the statistical read. Right? I'm reading it. I mean, we put it together. We literally put it together. Fuck. And I'm going to just go ahead and take you on this road here. This analysis here. With the upside probabilities that we face today. With the downside targets that we got. Was not performed by me. It was performed by one of my master students. And I don't even know if Dea's here right now. Right? But Dea performed this analysis here, and so far, so good. So my boy is up, guys, and I tell you this, many of my master students are now asking me, hey, Arca, can I also put out my thread of analysis? Can you also validate it? Can you peer review it? Can you do this? Can you do that? Yes, absolutely. I encourage this because I want to make fucking stars out of you. I want to make fucking strong ass traders. I want to make an army out of you. I'm literally building a fucking army out of you. And it starts with the ArcMastersCourse, and that's where it goes. Guys, this is, look at this setup, right? You see how he has it? It's like sometimes I have to read it twice because I can't, it's not in my structure. He puts it down the way he does, right? But when you see it on GME, you know, for my side of things, right? It's slightly different, right? This is his thing, right? Now, when you look at GME's, this is mine. So they're slightly off, right? That's because he does it his way. I teach you how to do it and for you to find out how to do it. I'm going to find the inner trader within you, right? You will become your own powerful trader using systems and using setups and using statistics and mathematical property. Guys, starting from the very beginning, from a very beginner's point, what is the first lecture that we're going to do as a beginner? What is a candle? That's where I start you off. The beginner's course is only 8 weeks long, right? Strategies is after that. It's going to be 12 weeks long. Executions is after strategies. That's going to be another 12 weeks. I am going to build stars out of you guys. I don't think you understand what I'm saying through my mouth. I am going to build fucking stars out of my traders. And I won't stop until they're done. And the mentorship happens every day during the Arca Bulls trading team. Every single day, I'm trying to make sure that I can get back to all of my students. And they're doing it, guys. They're doing it. So, AMC's probabilities. Let's go ahead and take a look at this. We need the signal fire. Oh my goodness, we're getting very close. The daily time frame is going to be where we're performing this back test, right? So we need the daily time frame, volatility versus momentum, to fire upside of the 15%. It did once and it faked out. Right in here. So it faked out. All good. No problem. We do it again. But the best part of this is this. The fact that we have all this contraction, guys, when we have the big phases of contraction, the bigger the phase of contraction, the bigger the move, the bigger the fucking explosion. Okay? If I can remind you guys, just a few months ago, your boy Arca was talking to you about GME at $10. We were talking about that very signal right here at deep contraction. Your boy said, I'm afraid to put this out. I'm afraid to put this out because because I'm going to get speared, right? If I say this thing is going to go to $22 from $10, I'm going to get speared. But I said, fuck it. Let's do it. I put out the thread of analysis. I gave the entries and shit went to 20 fucking bucks. All right. And that's using that system. Okay. That's using it's called the forecast max, right? Or the footprint model. So, but yes, it's no fucking secret. I'm going to teach you exactly how to use it. Every one of my students will learn how to use it. Okay. Now let's go ahead and observe post-market price on AMC and see what it did. Again, we're going to go ahead and observe this because we are under speculation here. First of all, the signal, I think, may be able to fire at around $5, right? So if we fire this around $5, that means that we would get some pretty high numbers from there. Let's just go ahead and speculate here. The average move to the upside based on a daily backtest, volatility versus momentum from my master's student, Dea, his calculations are coming out to 11.69, which would be equivalent to $5.59 from the present or the opening of the signal. The second upper bound would be the next one, and that's where we're going to limit this. That would be a 24.75, so 24 and 3/4 rip. That would be $6.24. If we have the $6.24, here is your range. You're looking at $5.97 to $6.54 within statistics, right? Okay. Now, I want to show you one more thing because we're getting cascading effects right now. The dominoes are kind of crumbling here, right? So let's look at this. I'm going to go ahead and block the visibility for a lot of the other moving averages that I have in here. Why? Because I want to show you just one pair. Starting from the 6-hour time frame, I don't like the pivot here, but this is showing us a death cross, right? But the 8-hour time frame, there could be something interesting happening here, guys. If we start this SMA 200 upside, right? If we continue it, that means that we may be able to follow that SMA 200 towards the upside, which then would make the SMA 50 start curling towards the upside. As soon as that SMA 50 crosses above the SMA 200, we would then have a cascading effect of a golden cross, okay? Your golden cross means when the SMA 50, right? Simple moving average 50 period, guys. Again, the very simple technicals that I want to teach you anyway, right? When that SMA 50 crosses above the SMA 200, we will be good. But right now, it's looking a little suspect, right? I will tell you this. Yes, it is suspect, but the pivot, the posturing of the SMA 200 does not comply with a bear play. Why is that? Because in order for you to validate a death cross, which is quite literally the SMA 50 teal line, right? The cyan line crossing below the SMA 200 longer period, in order for it to be valid, you need both of the moving averages to be postured towards the downside. So this is invalid, which then makes me think that there is a bear trap at play. Okay, let me go back. Let's see the 3-hour time frame. 3-hour time frame, sure. We've been doing this little bouncy bounce right here. I don't see the SMA 200. This has already been death crossed here, right? What I'm noticing is that now the distance between the moving averages, they're getting a little tighter. So if that's getting a little tighter, let me just pull up other moving averages. So that means that we have contraction, right? I'm going to put a whole bunch of other moving averages in here to see if the width of them Let me get rid of price. I'm going to show you something, all right? These are little tricks to the trade that you can learn. I'm going to hide price. Okay, take a look at the width of all this here. You see, this moving average to this moving average is really wide, right? All super wide price action. But look what's happening as we get closer and closer to price. They're all starting to converge within each other, right? That's a sign of contraction. Can we see it? Can we see it from a larger time frame? Yes, we can. Look, highly contractive, right? We're in the blue zone. Look at the width. Look at the width. You see the moving averages, how wide they are, and look at how close they're getting. Guys, when moving averages converge like this, that is a signal that something big may be happening soon. Okay, let's go to the 8-hour. Take a look at them. Look at the width. Look at all this mess of moving averages and look at where they all are jumbled right now. You see what I mean? Look at the contraction phase. That's all a sign of critical contraction. Now, the 8-hour time frame, what tells you, right? What tells you? What about this? Arca is saying, yeah, we're contracting, right? So if this thing fires off, how do we know that it's going to be the upside or the downside? That's going to be the age-old question here, but we're going to answer it right now, right? How do you know that? Here we go. Stochastic momentum is your directional indicator. This is telling you that you're at the oversold percentile with a potential volatility break of now the 10%, and it's touching the 15%. Remember my signal criteria? This shit pops off as soon as we break that 15%. And look at the pivot. Look what this is doing. On an 8-hour basis, AMC is already curling. So that's telling me here, and how, you know what? I'm going to do something here that I fucking will regret, but fuck it. I'm going to show you guys. But fuck it. I'm going to change my inputs. I'm going to go ahead and put this. Fuck it. Yeah, I'm going to do it. Okay. I'm going to show you a little bit of a forward look. How does this actually look more in the present time? Let me put D% at a value of 1. Look at the upside pivot. Then you put K% at a value of 7. Look where we are. But I don't like to see that. I don't like to see that because I want it to be delayed. I want it to show me the truth. I want it to be certain that it's going to do it. So I leave it very laxed. But I just showed you guys a little bit of a secret by using by manipulating the 14 period down to a 7 period and the 3 period exponential down to a 1 period. Meaning that I want the stochastic momentum indicator to give me at the moment suggestions. And guess what it's giving us? Upside on an 8-hour. And we're already observing the potentials of that curvature. I guys, fucking master students, I see you in there. I see your eyes going fucking insane. Don't do it. Don't do that. Okay? If you want to catch an idea, observe it as a tool. Okay? Kick your butts. Super kick your butt. All right? You need to, Happy Torito saying he needs to build a supercomputer with an Arca chip. Okay. All right, man. So we got the signals rolling in. Let's put price action back in. Let's get rid of the moving averages, right? And guys, what I'm showing you here is still that. Remember, 20 minutes ago, I told you that we're going to start looking at the technicals, right? The simpler way of observing price. The more, the more rudimentary, down to the fundamentals, right? Down to the rudiments of analysis, right? I'm going to show you guys the easier things, right? So that we're still performing that, right? We're combining it here, with statistics and all that. But if I can show you guys the inverse head and shoulders and the fucking bullish engulfings and the cups and handles, then you know what? Fuck it. Maybe if it gives it some attention, then let's do it. All good. In fact, if we just look at this in maybe a 3-day time frame, let's go ahead and just get rid of all of the drawings here and kind of look at what's happening here. Well, this appears to be an upside, right? And this also appears to be a bull pennant. So it is also it is also very bullish, right? It is indicating a potential continuation towards the upside based on a psychological form. Now, the next thing that we want to observe is what is getting close to closure. Guys, something very big is going to close here soon. Not anyone you hear is paying attention to this. The quarterly chart is about to close. We have 9 days to close the quarter. No one is paying attention to that. Okay. Now, which means that the present candle here, right? This is us. This is the prior bar, right? This is probably going to sit here for a bit, right? We need the stats to fire. That means that we have just what? Maybe a week or less to position ourselves to a great position here somewhere. Great. But the reversion would be an upside. Why is that? Because the quarterly candle is in the red. 60 to 70% of the time, statistically speaking, you will get a 30 to 50% prior bar retrace. Let's repeat that one more time. Take it in, right? It's going to be for your notes. 60 to 70% of the time, we will get a 30 to 50% prior bar retrace. That means that this quarter, closing in 9 days, right? We would get a 50% retrace, right? So where would that be? Now, I need to see where the hell this is because I can't see it with all the stats fucking laying everywhere. Let's go to the quarterly chart in this bastard here and see what the hell's going on, right? Stop interrupting me. Fucking chart. All right, so let's go to the quarter. Great. Now, let's observe that range in total. I want to know where it is. Great. Here's the top, right around that 577, right? Let's draw the box. Draw the silly little red box, right? It's going to tell us this is going to be the magical red box of truth. Right, here we go. The upside on this would be about $5.05. That's just its natural retracement. So what happens though? I'm not impressing you with that. What happens when we reach 505 though? Well, something great does happen. You then create this big ass bar into a huge support. 3 months worth of support at $4.98. That team is the next resistance that we can observe for AMC. Now, if we're looking at this based on, just how we said it, if we're looking at this based on discretion, does this rhyme with the targets that we have statistically speaking? Well, let's take a look. Do we have anything to rhyme with the $5 zone? $5. We want a $5 area. Okay. So we kind of do. We have a $5.59 realm. 559 is your 11.69% upside thrust. But remember, I'm speculating where it's going to where it's going to fire the signal. I don't know where it's going to fire it. I'm saying that it's going to fire it at $5. But what if it fires it at fucking below that? Right? So I'm already confluent. I'm already seeing that we have higher probabilities using other types of metrics. Let's go ahead and use one more. Why don't we go ahead and pull up the immediate short term, or you know what, maybe the 4-hour time frame, so we can use the fibs, right? Let's see if we have something there for us. Okay, let's get the fibs in line. We're going to take into consideration top of the price today to our local low. Just like this. Okay, great. Again, we want a 272 or a 618, right? Well, there you fucking go. $5.02 at the 2.272, $5.08 at the 2.618. Very cool. How about we use something else? We just said that we would reach $5 and what statistically? We said around 560. It looks like 559, right? So let's just call it a 560. Check this out. This is, let me pull it into a 12-hour time frame. And yeah, if you can observe, I know it's going to be a little difficult, right, to see it here. This is an inverse head and shoulders. Regression line is measured as such up here. That's going to be your neckline. The take profit from the bottom of that head all the way to the neckline is $5.68. Voici, voila, right? More confirmation. Now, what did I say about the fibs? Let's take the geometrics from the swing high to the overall swing low. Let's do that. 618, remember, 618 or 272, hopefully a fucking solid number of some sort. Oh, fuck. $5.68 on a solid number of some sort. Fuck yeah. All right. So there that is. All right. So I'm just giving it to you like that, guys. I'm not fucking making shit up here, man. I told you solid number 272 or 618 in that order. Give me that, and I'll be okay. So now we have geometric confluence, guys. We have statistical confluence, and we have the formation and psychological confluence. Let's go ahead and take this to the options flow and see if now, for the last part of the analysis, do we have the options flow to agree with that potential close to $6 valuation, right? So AMC, you know what? Let's go ahead and take a look at the term here and see how we're doing. Great, nice. Actually, fucking every single expiry here has blue. That means that it's bullish overall, right? So we are expecting here bullish momentum. Specifically, January 17th of 2025, 412,000 to 89,000 on that ratio put to call. Jeez Louise. Quinny baby, thank you so much, mommy. Guys, make sure to hit that like button. Do me that favor, guys. Do me that favor. Hit that like button, subscribe to the channel. Make sure to get your butts inside of the trading team and inside of the course. We're going to start here in about a week, and I want to see you guys there. Do it before enrollment closes, okay, guys? Remember, ArcMastersCourse at Gmail. Send me that email, okay? All right, so let's go ahead and now take a look at the open interest via the matrix. Let's open up the heat map here and see if we have any sort of interest within that $6 area, right? It would be around $5 to $6, maybe $5.50 to $6. Well, we do. The September 27th, 15,000 to 500, open interest at 550. Look at this, $6, 19,600 to 142 on the statistical side. How about them fucking eggs, right? Okay, let's keep it going. Let's see if we have anything to the right. Okay, around the man. Where do we have some more? Okay, $8 valuation. Okay, guys, if we don't have any more at $6, I can't tell you what to do. I don't know what the fuck to tell you. But yeah, okay, let's go down lower here. January 16th expiry is 105,000 at the $20 strike to 300 on the puts. What the fuck are people doing? Oh, no. Look at that. What are we actually seeing here? 119,000 open interest to 0 puts at $27. What in the actual hell is happening January 17th or near there? That's the call side, guys. This is the call versus the put. 12,000 at $8 to 3,000, 21,000 at $10 to 20, fucking 2,600 to 7, 7,700 to 2, 30,800 at 15 strike to nothing, 10,700 at the 17 strike to nothing. What the heck is actually happening? I don't know what's going on there. I am not talking to you guys about, I am not talking to you guys about those targets up there. In fact, I'm talking to you about a $6 fucking target here, man. A $5 to a $5.68. That's really what I'm talking about. But sentiment, for some reason or another, are pricing in higher valuations above the $10 mark than anything I've ever seen in my life. So that's where I'm at. And this is saying that right now, guys, we're going to get the true numbers here on Monday. This is reflective as of Thursday. So holy shit, man. We are onto something here. I'm going to keep a close eye to both GME and AMC. And I got to tell you guys that usually the team reminds me, like, hey, Arca, go ahead and give an eye here to GME or AMC. Let me know what's going on, right? We'll go right to it. We'll take a look at it, right? We'll see what it's doing. You guys have access to me when we're trading in the team. Join it. These links here are going to expire here pretty soon. This is about the last chance I want to give anyone to join my team for a one-time trading fee. That's it. But other than that, it's going to be subscription-based and monthly. So before they expire, reach out to me via those links, okay? All right, guys, it's in the description below, too. I think this is a pretty good place to leave off. Let's go ahead and throw those A's in the chat. If you want another stream on Sunday night before the fucking market opens, go ahead and throw those A's in the chat right now if you want another stream on Sunday night from Arca Bulls so that we can evaluate the plays one more time before we get the markets to open on that coming Monday in our next session, right? What is it going to be, guys? Throw those A's in the chat right away. Let me know right away, and we'll get this thing moving into grooving, man. Oh, boy. I love it, guys. I love it. I love it. Thank you guys so much for participating here with your boy Arca. Thank you so much for my donors. Guys, I love you so much, man. That really means a great deal to me, okay? Now, remember, guys, I'm going to go ahead and start the after party here inside of the Arca Bulls trading team. If you are curious, this is the last, actually maybe Monday, right? But this is the last day that I'm giving access to the trading team's after parties for free. So hit the link to the Discord in the description below and make your way over to the Arca Bulls trading team right now so that you can come by and check me out and check the rest of the team out at our after party, right? This is the link that I'm putting up in the chat, right? Make sure to hit that link right away. Come on by. I want to see you there, right? Thank you guys so much. And I think this is a pretty good place to leave off. Any questions, you know where to reach me. Remember that it's at Arca Bulls, right? It's going to be the ArcMastersCourse, right? Right here. Join here before it closes up, guys. The seats are getting taken because there's only a week away. It's only a week away, really. ArcMastersCourse at gmail.com, and everything will be good, right? I love you, team. We will talk very soon in the other side. I'll catch you on the flip side. That's what it is, man. Please take whatever I do, show, and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever, ever. I need you to do your own due diligence, and everything will be cool. Well, with that said, team, I wish you well. A very, very good rest of your fucking night and or day, and I will catch you at the bell on Monday. Adios!